questions after that. So I'm just going to give a brief introduction with regards to VFEX when it comes to CFDs. VFEX is the regulator, and the main emphasis that I just want to point out before I give the floor to the actual trainers is that the main goal of VFX is to protect the investor. How are we protecting the investor? The first thing is whenever you open a position or whenever you deposit funds into the VCG account as your broker, which you'd have selected as the licensed broker, we will make sure that the broker has a collateral account which will be ready to cover your exposure. What do we mean by that? We're saying, for example, if Farai Mpofu opens an account, and then in that account, he funds his account with $100. And then he opens positions for any Forex pairings that are there. And then Farai so happens to make a profit of 2,000. What we do as VFEX is we have a management portal which will then tell us that the total potential amount that should be given to investors is the 2,000 for Farai plus the other amounts that could lead up to 10,000. The regulator will then make sure that VCG will always have a collateral account which will be able to cover the winning positions. So VCG will have, say, 20,000 in their account, just in case, God forbid, something happens and VCG is no longer there to cover the obligations that are there. We will then simply turn to the collateral account, which would have been put in place to cover all the open positions or the winning positions, as well as the initial deposited funds. So the main aim is to make sure that whatever happens, you will still get your funds. And that's where we come in as the regulator. We do the calculations monthly, and we send the requirements and requests to the broker, and the broker is always there to then they are there to then cover whatever obligations we would have set for them. So we also look at the KYC process, how they are onboarding you, and the general customer care that they'll be doing. So far, we're happy to say that VCG has managed to live up to the expectations that we set for them. They have been a good broker in terms of the customer response, in terms of assisting the customers, as well as also opening up to come and do these partnership trainings that we're doing here. So today, based on me saying that, I would then like to ask Teacher Honor I would then like to ask Teacher Honor from the VCG side to then give us a presentation about who is VCG and why you should register with VCG. So yeah, thank you very much, Teacher Honor.
Sorry, thank you very much, Edmond. It's going to be Robson first, and then Teacher Honor will come in later.
That's fine. Go ahead, Robson.
Yes, so as I've already said, my name is Robson Gray, and I'm an account manager with VCG Markets. So I'm just going to give everyone a rundown about VCG Markets, what we are and what we offer. So I'm going to try and share my screen.
As a sharing his screen, kindly note that this is being recorded, so I will then share the recordings and the PowerPoints with you.
Sorry, can you see my screen?
Yes.
All right. So VCG Markets, where broker you can trust. That is our motto there. Then, what is VCG Markets? So, as Edmond has already said, VCG Markets is the Zimbabwe's first fully registered, regulated, and licensed securities dealing firm. So, we are licensed by Securities and Exchange Commissions of Zimbabwe, SECZIM, and also a member of Victoria Falls Stock Exchange, which are our regulators. So, what do we offer at VCG Markets? At VCG Markets, we offer a wide range of products, including stocks and shares, your Apple, Tesla, Google, Nifty, your currencies, your Euro USD, gold, and pounds, then precious metals from gold, silver, palladium, platinum, and indices as well, as well, not limited to cryptocurrencies. So, why should one choose VCG markets? So, there are several reasons why one should choose VCG markets. Because trading with us has zero capital gains tax benefit. We have very tight spreads, negative balance protection. We have our dedicated customer support that can be there at any given point in time. Cost-effective trading. We do offer a platform called VCG Social where you can copy trades from professional traders that we do have on the platform. And also, like I already said before, we are fully licensed and regulated, and as well as a member of Victoria Falls Stock Exchange. So the next step is, how would you start trading with VCG markets? So starting to trade with us is very simple. All you have to do is to head over to our website, www.vcgmarkets.com, and open a live account. There you would have to enter your email and your desired password, which then will take you to your portal. And another interesting point to note is we now do have an application called VCG Markets Trading Application. This is where you can have your own personalized portal where you can see all your account summary, where you can deposit and withdraw as well. And on the trading app, you'd have things where you can actually even trade from it other than on MT5. So after you have entered your portal, you then need to upload your documents, which is your ID and your proof of res for verification process. That is all about how you can start trading with us. Then going back to the VCG Social, like I said, it's a copy trading platform that we have where one can copy trades from professional traders that we have, because we have over 400 professional traders on the platform. So how it works is, think of it as having an asset manager, but at your fingertips. So in this application, it looks like this. So on this slide here, we do have, when you open the application after registration, there's the spotlight, the low drawdown, then it goes to the medium drawdown to the high drawdown. So people on the spotlight, these are people that are high return on the investment that they have made. And people that are on low drawdown, these are people that when they make a trade, the potential losses that they make, which is unrealized, because the market sometimes when you open trades, it doesn't essentially move your direction. Sometimes you open trades and it takes an like a downside to where you would have predicted your trade to go. So when you're saying someone with low drawdown, is they are usually not so wrong when they open trades. It's more of like they do snipe their trades, that whenever they open trades, the market really go downward for them to lose their account balance. So these are people on low drawdown. Same applies to middle and high drawdown. So low drawdown traders are people that trade less risky products, and high drawdown are people that trade high risk with high risk as well. So on the second screenshot here, we do have the one that is on Spotlight called the Holy Grail. So to copy the Holy Grail, this is the comprehensive information that you see before you copy someone. So to copy the Holy Grail, you're going to see this information that gives you a rundown of what he trades and how he trades, his profitability and the return history that he has. So we are going to see that on profitability that he has realized the return of over 10,029%, and he's currently holding, at the time of the screenshot, a potential loss of 2024. So he had open trades that were running on a loss of 2024. But you can see from his balance of 28,000, 575, that he is only holding a running profit and loss of negative 2024. So what then that means is you can then see his balance maximum drawdown, which is at 51.41%. What this means is if one person is to copy the Holy Grail, their balance, if you have $100, there is potential because at one point he managed to uh, hold, because it's holding potential losses since it's unrealized, is to hold potential losses up to 51.41%, which is almost $52 on your $100 account. What we then say is this one is a high risk trader, because when someone holds a loss, a potential loss of over 50%, but you can see from his profitability that those losses, that potential loss becomes after realized profit after realized profit when he closes the position, it gets to be profitable. But the risk here is when he is holding that potential loss, it's a risk in your account if you have a smaller account. And then here, his fee is 30%, and he has 2,356 people that are following and copying his trades. So this fee can only be charged when every month. So at the beginning of every month, if he has made profit in your account, the 30% fee is deducted from the profit that he has made in totality in your account as well. Then on the third screenshot there, you can see the number of trades he has made and his win rate. So win rate is very important in trading because that is what separates profitable traders and those that are not profitable. He has a 94.35% win rate, which is quite very high, because win rate when it comes to trading, a lot of traders that are good, you'd be rated as a good trader when you're holding at least 60% win rate, because at least you're able to cover your losses. And you are also going to see markets traded. So from here, when you're about to copy someone, you are going to see the stuff that he trades. This is very important because if you're an investor, you have certain financial goals and needs that you want to meet, maybe in the next 3 months or in the next 6 months. This helps you to actually make your decision when you're copying someone. Because if the person trades exactly things that are like, maybe they hold long-term trades or maybe they hold short-term trades, so you'd be able to make your decision based on that, and also something that goes hand in hand with your financial goals as well. So you can see that he trades, sorry, he trades, it's only that here, if you click, that is where you are going to see the markets that he trades, because he trades something like pounds against the US dollar, euro against the US dollar, and you can see from there that he trades a lot of stuff there. That's why his risk is also quite high as well. So basically, that is all about the VCG social. From here, after you have seen all this, you would be able to make your decision on who to follow and copy as well. So from when I was talking about the unrealized profit and loss and realized profit and loss, on trade and positions, you'd be able to see here where Holy Grail is. These are his current holding unrealized profit and loss. On the left side, he's holding losses and also profits. In Euro USD, he entered the buy position and he's holding a profit of $2. And he has other open positions on Euro USD that are currently holding losses. So he has realized on his realized profit as well. That's where you see the stuff that he has traded and the amount of money that it had made when he was trading that stuff. So that is all on VCG Social. And that is all that I had with me today. I am going to pass the battalion to Teach, that is going to extend this lesson and help us understand better about trading. Thank you very much.
Thank you, Robson. Good morning, everyone. I hope you can hear me. My name is Tich, and I'm an account manager with VCG Markets. So I'm going to touch on mainly how to navigate through the MetaTrader 5 application. I hope all of you had downloaded it. If you hadn't, our account managers will send the link to you in the chat section. So let me share my screen. Okay. I hope my screen is visible.
Yep, the screen is visible. We can see it.
Lovely. So today I'm going to touch on the different types of charts that we find in the financial markets. I'm also going to look at our trading styles and also types of orders, because in the financial markets we place different types of orders. This is mainly how you're going to enter and exit the market. I'm also going to touch on lot sizes. Okay. I hope that you had downloaded the MetaTrader 5 application. Okay. So first of all, what is the first thing that we notice when we open the MetaTrader 5 application? The first thing that we notice is a chart. So basically, a chart is a visual representation of a currency pair's price over a set period of time. Okay. Let me open one. So this is a typical example of what you would see when you open the application. Currently, I'm using the web-based application, but there's also the mobile phone version. So this is what our chart would look like. So like all charts, you have your vertical axis to the left side here. So primarily this shows our price of the assets that we would be looking at. In this circumstance, we're looking at the Bitcoin relative to the US dollar. So for all of our cryptocurrency enthusiasts, this is what the Bitcoin chart would look like. So currently, the vertical axis here, where we have the green line, it shows us the price of Bitcoin at the prevailing market. So currently our price is at 102,637, indicated by the green line over here. Then our vertical axis, basically it shows us the time period, the time interval for each interval the market moves. So we have different types of charts that we can use to navigate through the application. We have what we call a candlestick chart, which is what you see right now. As you have all figured, the name comes from the shape of the chart. You see, it looks like a candlestick. It has a body and it has a wick. So let me go back to my presentation. Okay. Candlestick chart. So with the candlestick chart, primarily it shows us the opening price and the closing price and the highest price that the time interval would have reached and the lowest price that the time interval would have reached. So I'm sure you've noticed that we have different types of candlesticks. We have a green candlestick and we have a red candlestick. So when we see a green candlestick, usually it indicates that the market is bullish, meaning that the market is going up. So meaning to say, when you place a buy, and if the market goes up, you make a profit. And if you place a sell, which is indicated by the red candlesticks that you see on the chart, it means that the market is going down. So going back to my presentation. So as you can see, we have what we call a real body indicated by in this case, the green candlestick. You can see that it's highlighted by the green section. We have the open price, which is below. Then we have the closing price, which is at the top. And the highest price is indicated by the top part of the wick. We call this line section a wick. So it highlights us the highest price and the lowest price. Same follows with a bearish candle, which is indicated here by the red candle. Our open price would be at the top, our closing price would be at the bottom, and then we have our highest point and our lowest point. So this is a candlestick. So we also have what we call a line chart. So from the name, basically, it's just a line. So this basically connects the closing price of each interval that we would be analyzing the markets. So this chart comes with the advantage that it's easy to see and to actually do your technical analysis. Your technical analysis being your chart analysis, whereby you're using your trend lines, you're using your support and your resistance to analyze the market. Then we have what we call a bar chart. As the name says, this is basically a bar. So with a bar chart, it's more or less similar to a candlestick chart. We shall see why. So essentially with a bar chart, you have your opening price indicated by the line here to the left. And then you have your closing price indicated by the line here to the right. And you have your lowest part and your highest part. Then the length of the bar, it depends with the price movement, depending on how volatile the markets are. So a short line, short range from the low to the high would indicate that there's been low volatility in the market, whereby a longer range would indicate there's high movement and volatility in the market. So this basically are different types of charts that we see in the financial markets and when analyzing whatever financial instrument we'll be looking at. From there, we'll touch on what type of trader are you? So this is a very important question that you need to ask yourself before you start trading. And this actually depends on a number of factors, primarily which are whether your trading strategy, your account size also, and also your patience and risk management. So we have different types of trading styles. We have what we call scalping. There's also day trading. We have swing trading and position trading. I will elaborate a bit more on each of them. So essentially with scalping, these are the types of traders who find an opportunity in the market, they enter a position and they close the position just within a few minutes or a few seconds. So let's take, for example, maybe you hear some news that maybe interest rates are going to be cut, and you're looking at the Euro USD chart. Let me open the Euro USD chart. So this is the Euro USD chart. So you find an opportunity to enter the market. You would come here and you would place your trade. Let's take, for example, maybe you want to take a sell, which I have placed here. So scalpers only enter the market for a few seconds or for a few minutes. And whenever they reach their target, they close their trade. They typically deal with low time frames. Time frames being the time intervals that you're analyzing the market. We have different types of intervals. For instance, here we're looking at the 5-minute, which is indicated here by the M5. We also have the 15-minute, indicated by the M15. Then the H1 is the 1 hour. The H4 is the 4 hours. The D1 is the daily. Then the W1 is the weekly, and the MN is the monthly, and so forth. So with scalpers, they typically analyze the market at lower time frames, this being your 5-minute and your 1-minute. They enter a trade and they then close their trade when they make their profits. Then we have what we call From scalpers, we have what we call our day traders. So as the name iterates, typically day traders, these are the type of guys who enter the markets mainly on a daily, not per se on a daily basis, but they only look for trades within a day. So they find, or they usually work on higher time frames. Basically, let me go back to my MT5. Your higher time frames being your maybe your 1 hour, your 4 hour, and your daily. So they go on a higher time frame like the daily. They find their bias. The bias being there over a direction that they wish to trade for that day. Maybe here in our example, we have the Euro USD. As we can see, we have a green candle iterating that the market is going to go up. So with day traders, maybe they might see this and say that overall the market is going to go up. So what they'll do, they'll enter their buy position and hold it for a couple of hours, maybe hold it throughout the day. And when the day is over, they close their trades and take their profits. So day trading is this is mainly for people who don't have more time to analyze the markets and who don't want to stay focused on the charts for too long. So you just come in and analyze it for a brief period of time, and then you set your trades and go on with your business. So those are typically your day traders. So with day traders, they usually use a mixture of technical and fundamental analysis. Your technical analysis, as I explained earlier, being your support and resistance, your moving averages, and your chart patterns, and all the type of analysis that you do looking at the chart. And then your fundamental analysis, essentially, you'll be looking at economic, geopolitical conditions, economic indicators like your GDP, your interest rates. On Friday, I think on Friday, there's some news that's coming out, your non-farm payroll. So typically, you'll be looking at stuff like that on your fundamental analysis. So those are your day traders. We have what we call swing traders. So this type of traders, these guys like to hold trades for maybe days or weeks. So they analyze the markets obviously on the higher time frames. This obviously is starting from your daily and your weekly and the 4 hour. So they come and they look at their charts and they select their bias. Maybe they're going bullish or maybe they're going bearish, depending on the fundamental and the technical analysis that they would have done. And they hold their trades for a long period of time. So this is mainly for investors who don't want like your scalpers who enter the market all the time. Like they find quick opportunities. These guys, they come in, they analyze once, and then they hold their trades for a longer periods of time. So maybe this is more suited for people who are interested maybe in the stock market, your cryptocurrency market. Like for instance, with Bitcoin, if we go back to Bitcoin chart, and let's try to go on the monthly time frame. We can see that from a 3-month period indicated here by the red line that I placed, Bitcoin has been very bullish with a very low price of 58,698 as I highlighted here with the red line. And it is risen up to this point here that I'm going to place this red line here at 103,446. So your typical swing trader would have entered maybe here, which is 4 months ago. This is pre maybe US elections. Maybe they hear news that Trump is going to adopt and assimilate cryptocurrencies in their economic policies, and they enter their long position from this point here indicated by the red line, and they hold it for 4 months. So you would see that you would have made a lot of money by doing this, which is one of the advantages of CFD trading. So that's typically your swing traders. Then we have your position traders. These position traders are similar to your swing traders in that they hold trades positions for even weeks, months, or even years. So you can enter a position maybe in January and hold it up to December. So these guys, they rarely use technical analysis. They mainly focus on fundamental analysis, which is your geopolitical news, your socio-economic indicators, and etc. So depending on the type of trader you are, you may fall in these 4 different categories, being your scalper, your swing trader, your position trader, and your day trader. Then we have different types of orders in the financial markets. Typically, we have what we call a market order, which is an order that is instantly executed against the price that your broker has provided. So here on the chart, if I go back, maybe we can look at gold, which is indicated here as RAW USD. So I am looking at the 4-hour time frame. So when you make a market order, essentially you are going to execute a position at the current prevailing price. So to do that on your MetaTrader 5, you just come here, wait, sales, sell, and enter your position. As you can see, our position here has been entered at 2,645 at the current market price. Alternatively, if you wanted to place a buy, if you think that the market is going to go up, or if the market is bullish, you would come here and you would place your buy here, and instantly it would execute your order. So these are your market orders. Then we have what we call pending orders. So a pending order is an order to be executed at a later time at a price you specify. So that means that you as a trader have the control over the price. And you don't have control of the price per se, you have control at the time and the price as well. So if we come back here at the market, at the chart, let me choose another chart. Maybe I'll go for the USD card, your United States dollar and your Canadian dollar. So essentially it will look like this. Before I highlight how you would open your pending orders, let me briefly explain the different types of pending orders that we have. We have your buy limit, we have what we call a buy stop, we have a sell limit, and we have a sell stop. So essentially, basically, we have 2 types of orders, your limit orders and your stop orders. So your limit orders, this is basically an order that is placed either to buy below the market price or sell above the market price at a certain price that you would have specified. So if I come back to my chart, okay, let me go back to the gold one, which is a bit more visible and clear. And let me close these trades. To implement a pending order, you essentially go here where it says new order at this icon, which looks like a file. You click on it. It will immediately show this icon over here. You would go here where it says type, and you would click on it and select pending order. In this circumstance, let's say we want to place a buy limit. So essentially with a buy limit, we place it below the current prevailing market price. So what happens is, let me enter it. Let's set our volume at 0.01, maybe our price a bit below. Maybe it's too close. Let me place it here. So indicated by the dashed green line, this is our buy limit. So essentially what we're saying is price, when it comes down to this level, indicated by the dashed green line, it will activate a buy order. So meaning when price reaches here, immediately it will activate a buy position. And if the market turns and goes bullish, you'd start to see your profits coming in. Alternatively, if the market continues down, that's when you start to experience losses. But fortunately for you, on our platform, we have what we call stop loss levels to mitigate that. So that is your buy limit. Let's also place a sell limit. We go back to here, a new order. At type, we go at pending order. Then at here below where it says buy limit, we select sell limit. Then our volume, we use the 0.01 for now. So with the sell limit, we place it above the prevailing market price. So let me place it a bit above. Okay. I'll place it here. So essentially, it's basically the opposite of a buy limit. What we're saying is when our price reaches this level indicated by the dashed green line here at 2,633, a sell position would be activated. So if price reaches this level, it activates a sell position. And if the market goes down, you'd start to see your profits coming in. But alternatively, if the markets start to go up from your level, that's when you will see start to experience losses. So with your sell limit and your buy limit, that's basically how you place them. Let me close them.
Hi, Tich.
Yes.
For the sake of the participants, can you explain why your volume you kept putting 0.01?
Actually, it's a good thing that you asked it because I was about to touch about it at the later stage of my presentation.
That's okay then. Okay, thanks.
Okay. So don't worry, I'll touch on that. Now I'll look at a stop order. So essentially with a stop order, this is an order placed to buy above the market price or sell below the market price. We'll go back to our MetaTrader 5. So to place your, let's say for example, we want to place a buy stop. We go here again at new order. We at type, we go at pending order. Then where it says buy limit, we select our buy stop here. From there, we place our price above. Okay. When it makes this sound, it means that the price would be very close to the current prevailing market price and it won't be able to be executed. So what you would need to do is place it at an even higher price for it to execute. Yeah, lovely. So let me shift it here for you to see. I'll place it here, this level. So with the buy stop, essentially we're saying that if market turns around and start to go upwards, when it reaches this level, it will execute a buy position. And if the market continues up, you would begin to see profits. But if the market goes down, you would start to see losses incurring in your trading account. So basically, stop orders are like continuation orders. When you're saying is the market is going bullish, if it triggers that order and continues in your direction, you'll be making money. For more clarification, I'll also place a sell stop again with the same process. Have a sell stop here. So as you have already guessed, with a sell stop, you place it below the current prevailing market price. Okay. Now you can see and place. Let me place it below because it was too close to our price. I'll place it here and drag it down below. So with the sell stop, we're saying that when price reaches this level, and if it continues downwards, you would see profits in your account, and vice versa. If it goes the other direction, you would start to experience losses. Maybe let me put it close to the prevalent market price so that you could see what happens when it executes the trade. Okay. Let me go on a lower time frame, the 5 minute. Okay. Okay. Okay, it's now too close. Let me also place my buy limit so that you could see when either one is activated, what it looks like. So here, as I'm placing my orders, I haven't done any analysis. I'm just guessing on the price. But obviously, when you are trading with a real account, you would have done your prior analysis. So as we have seen, market has touched our sell limit, sell stop, sorry, that we have placed, and it has activated our sell. So as we can see here, down below, it's indicating that we are in profits of 24 cents. So whenever price reaches that level, it would activate the position that we have placed, and the market will start to move in its direction. And if it's in our favor, we would accrue profits. If it's not in our favor, we would start to experience losses, as I have highlighted too many times. So going back to my presentation. I'm now going to touch on a very important level that we heavily talk about here in the Forex market, and I'm sure in the stock market it's there as well, your stop loss level. So essentially with the stop loss level, this is an exit order that you can set to automatically close a position if it reaches a specified price that is worse than the current market price. So essentially, in a nutshell, what we're saying that, okay, let me move this here. Here we've entered our sell stop. It has been activated, and we're currently in 4 cents in. So let's say the market decides to turn around and doesn't go in our favor. We would need to place our stop loss to mitigate our possible losses that we can experience. So basically, to place a stop loss, you would come here on the line, click on it, and move in the opposite direction of your trade. So it will be highlighted here by this red dashed line. So essentially, we are saying that yes, we've entered a trade, and unfortunately, it hasn't entered. It hasn't gone in our direction. Let us mitigate our losses. So whenever this level here that I've placed at 2,644 has been reached, it will automatically close our trade. So here we let me bring it closer so that it can be activated. Okay, it's a bit too close now to the current price. So essentially what we're saying, if this green candle here touches on the red line, it will close our trade. And let's say if it closes here, it will close the trade at a loss of 66 cents. So this, lovely, it has been activated. So you saw that when price reached that level, it closed the trade. So this is very helpful, especially when you're dealing with the financial markets and there's risk associated. So we heavily stress on using stop losses whenever you enter a trade. Alternatively to your stop losses, we also have what we call take profits. So basically, a take profit is the opposite of a stop loss. We're saying that this is an exit order that can be set to automatically close a position if it reaches a specified price that is favorable than the current market price. So again, we go to our MT5 charts. Let me place maybe a sell here. Okay, so like the stop loss that we placed with the take profit, if we place a sell, we'd place it downwards here. We just drag on this red line and maybe place it here. So we're saying that if the market continues to go down from the way we executed our trade, and if it reaches this level, we would have secured our profits. In this case, our TP is here. So if it reaches this level with the position size that we entered, we would have a profit of $1.47. So this is very helpful when you want to lock in those profits that you would have made. Maybe you're a swing trader, a day trader, or maybe you're a scalper. Take profits and stop loss levels help you to exercise proper risk management, and it also helps you, especially if you are not the type who wants to spend the whole day analyzing the charts. You can just place your positions and you place your levels here and you just go on with your business. Later on, when you have time, you could just check your MT5 and you'd see that the market is going in a direction and you have made a profit, which would have been already locked in by your take profit. Same applies with your stop loss. If it doesn't go in your direction, at least you would have cut your losses short and leave on to analyze the market another day. So going back to my presentation, I'm going to look at what Edmond was talking about, your lot sizes. So basically with lot sizes, this refers to the quantity of units of a financial instrument that you are trading. So we have different types of lot sizes. Let me come back to the MetaTrader 5 again. So your lot size will be indicated here at this where my cursor is on, at the sell and the buy, here where it says 0.01. This will show you your lot size. So we have different lot sizes in Forex. We have typically a standard account with VCG has 100,000 units. So this would be indicated by a lot size of 1. So this is to say when you're entering the market, you are trading 100,000 units of the financial instrument that you'll be trading. So let's say, for example, here our sell position, which we placed at 26,043. So if we're not using our lot sizes here, typically a small movement in price, you wouldn't make much profit or you wouldn't experience a significant loss because you'll be dealing with, it's more like you're dealing at a 1-to-1 ratio. But with 100,000 units, we're saying that you are trading 100,000 of the current market price. In this case, we're dealing with gold indicated by Zhao USD. So if price moves in our favor, that's why we're saying that we're in a profit of $1 because of those lot sizes. So let me go back a bit so that you could understand the different types of lot sizes we have. So if you place a volume of 1, a lot size of 1, this is the standard lot, you'll be trading 100,000 units. And alternatively, if you place a lot size of 0.1, it means that you'll be trading 10,000 units of the financial instrument that you'll be analyzing. Then if you're trading 1,000 units, typically you would place 0.01. This is usually the lowest lot size that you can place. So as a beginner, if you're starting out CFD trading, we highly stress that you start with lower lot sizes. And as you get more experience and confidence in trading the financial markets, you can try bigger, higher lot sizes. So going back, I think I'll do an example so that you could see the significance of using lot sizes. I'll close these trades. Okay. Let's say I place a sell at the lowest lot size, which is 0.01, which is a mini lot. Okay. Then for example's sake, I'll also place at 0.1, which is your micro lot. I'll also place a sell. Okay. Already you can see the change with the micro lot with the mini lot, sorry, that we placed here. You can see that our loss is at 15 cents. But with the mini lot that I placed at 0.1, we're already experiencing a loss of $6.80. Let's see what would happen if we place it at a standard lot. Place a sell again. Already you see that with a very small movement in price fluctuation, already we're experiencing a loss of $26, $16 is fluctuating. So lot sizes are a double-edged sword. The higher you go, the greater the risk, and the lower the risk. So this depends on your trading strategy and methodology that you'll be implementing. But as a beginner, I highly stress that you start with lower lot sizes. So this is typically for the Forex market. These are the lot sizes that you would see. But we have commodities like gold. This is a bit different as you'll be trading in ounces. So a standard lot, if you're trading gold, would consist of 100 ounces, which would be at a lot size of 1. Then a mini lot would be 10 ounces, which would be at a lot size of 0.1. Then a micro lot would be the lowest lot size that we have, which is 0.01. Going back to the chart, we were already at the gold chart. So basically, the volume or lot size of 1 that we placed here at the loss of minus $10, it's now in profit of $10, would be our standard lot. The 0.1 here at loss of minus $5 would be your micro lot. Then the 0.01 would be your mini lot. So this is very helpful, especially when trading, because you find that depending on the trading strategy that you implement and the type of trader that you are, like as I iterated below, scalpers, the types of traders who enter the markets instantly and exit within a few minutes or a few seconds. Typically, they use higher lot sizes because you would see that price would have fluctuated maybe by a small margin. So they would want to capitalize on this, which is why they would use higher lot sizes, because a small fluctuation in price would be very profitable for them. Then typically with your day traders and your position traders and swing traders, they would use your lower lot sizes because you would find that they'll be holding their trades for a long periods of time. And typically, before the markets go in your direction, they might take a dip and then turn around. But for that dip, at least with a small lot size, we're saying that your account would be able to handle it, which is another important thing that also your account balance will determine the amount uh, or the quantity of lot sizes you can trade on, which I think will be highlighted in another trading seminar. Okay, so the factors I was talking about to consider when you're choosing your lot size, your account size, your risk tolerance, and your trading strategy. Okay, we have a general rule when investing in the financial markets. Typically, you should not risk more than 1 to 2% of your trading capital on a single trade. So this is important as I was saying that it will help prolong your account in the event that maybe the markets are not going in your direction. So typically, if you are to, maybe you have $100 account, if you're risking 1%, that would mean you are risking $1. So what we're saying is when you place your trade with $100 account, and if you're risking $1 per each trade, you would place your stop loss at exactly at $1. So if price doesn't go in your direction, you would have you made a loss of $1. Then if price goes in your direction, that would be very favorable for you, and you will start to accrue profits. So typically, a risk-reward ratio for that should be more than 1:1. So meaning to say that if you're risking $1, your trade should be worthwhile. It should be at least 1 to 2. So if you're risking $1, you're expecting to make it $2, and gradually your account would accumulate, and you would start to see maybe a positive balance in your account. So that is on risk management. So how do we calculate lot sizes? So to calculate your lot size, you take your account balance, you multiply it by your risk, which is your 1% or 2% if you're a very risk-averse trader. Then you divide that amount by your the difference between your entry price and your stop loss. This is measured in pips. I think it was covered in the last training session. Basically, a pip is the smallest price movement that you would see. Let me go to the Euro USD. So typically, a pip is the fourth decimal point that you would see. So in this case, here with our current market price, which is at 1.05224. So our pip would be the 4 here, the 4, which would be your 4 pips. So what we're saying is, let's take maybe a sell position here at the lowest lot size. Okay, then we maybe want to place our take profit here, which maybe we want to make a profit of $5. Let's say $10 to make it simple. Okay, and that would mean our stop loss would place it at $1. So here, what I'm basically saying is from the trade that we have taken on the Euro USD, we are saying that if we make a profit, we're expecting to make $10, and we would be risking $1. So our risk reward ratio would be a 1 to 10. So the difference between our stop loss and our entry price and our stop loss, which is on top here, would be 26 pips. So that would be the difference that you would input in this formula that I had highlighted. So typically, basically what we're saying with the very easy example, you have $100 in your account, you're risking 1%, which is $1, and maybe your stop loss, you've placed it at 50 pips. Basically, you're saying that your 100 multiplied by your 1%, which is your $1, divided by your 50 pips, which would give you 0.02. This would be the lot size that you would place with those parameters. So sticking to your lot size is very essential, as it would keep you more disciplined, and it will keep you, what can I say, for lack of a better term, I'd say it will keep you more, I think disciplined is the proper term here. It will help you maintain your account size, and it will help you accumulate gradual gains. And at the same time, if price doesn't go in your favor, we're saying that you would be risking $1, maybe to make $10, $5, depending on your risk reward ratio, which ultimately depends on your trading methodology. So I think on webinars to be done in the future, I think we will touch on how to the different types of trading styles that you would see, how to place your trades, your entry points, your stop losses, and take profits from the different strategies that are there. So just a recap of what was covered in the last session. Margin. Margin refers to the amount of money that a trader must deposit with a broker to open and maintain a trade position. So in order to place a trade and maintain that trade, you have to place a specific amount of money. Typically with VCG markets, our margin is at 30%. So we're saying that maybe you're entering with a very low lot size, maybe a 0.01. Maybe you're trading with a $100 account. The margin would be at $30. So you would need $30 to be able to handle position sizes of $100. Same as leverage. Basically, leverage refers to the ability to control a large position in the market with a relatively small amount of capital. So here at VCG, our leverage is at 1:500. This is to say that if you place your maybe your $10, you make a deposit of $10. When you are entering trades, it's like you're trading with that's 10 multiplied by your 500, which would be 5,000. So it's like you're entering trades with a position size of $5,000. Then we have what we call a spread, which is the difference between the bid price and the ask price. Basically, the bid price is the price that you sell at. Then the ask price is the price that you buy at. So the difference between these two, your sell and your buy, is your spread, and that's how typically we brokers make our money. So going back. So basically, that is all for this trading session. We will now enter our Q&A session, whereby you get ask some questions that you have. We will have our account managers at standby to also answer any questions that you may have. Okay, so if you have a question, you can raise your hand, and you could also type in the chat section.
Yes, sure. You can go ahead.
Okay. I see that Sean raised his hand.
Yes. First of all, thank you very much for the presentation. It was very clear and elaborate. I was just curious, however, as someone who might be coming in and wants to start trading for the first time, in your
Okay.
experience, how long does it usually take for someone, say I come in, I'm attending the sessions, I'm paying attention, and I'm following along. I open my MetaTrader account and I'm doing exactly what you propose that I should do. How long does it usually take someone for them to then get to a point where they can do without the sessions, they are doing their own trading, making their own gradual gains in their account, in their live account, of course? That's my question. Thank you.
Right. That's a very good question, Son. Typically, that actually depends with the person. You find that some people, maybe within a week, within 2 weeks, or maybe a month, they would have get a clear understanding of how everything works. So it actually depends with you. But fortunately, for you is we have what we call a demo account on our platform. So typically a demo account is a practice account which would help you to uh, enter the financial markets with zero risk because you would be using virtual funds. So I'd say using your demo account, attending these webinar sessions, and also on our VCG website, we have what we call our VCG Grow Academy, whereby you find free comprehensive learning material that would also be helpful to you. So the material is all around. So it's just a question of your dedication and your effort.
All right, that's quite clear. Thank you.
So in
Unfortunately for
short,
you,
you're saying 3 months.
it depends. It might actually 3 months is actually a lot. Maybe a month.
Yeah,
A
that's
month.
where you wanted to get to. Why did you say a time frame?
I'd say
All
a
right,
month,
thanks. Okay. Is
give or take.
for the attendees, it's now open up for the floor. If there is anyone with questions, you can type some of the questions, or you can just unmute your mic and raise your hand and then unmute your mic. It's okay.
Okay, I see JT has a question.
Good morning. Do you guys hear me? I have an extension on my computer.
We can hear you clearly.
Good, good. Thanks for the presentation, quite well detailed. I've been chatting some questions within the chat box, so much of them have been answered. Just a quick one on the success and failure rate in terms of what data you guys have at the back end. How successful are people using your platform?
Okay, that is a very good question. So as I would reiterate again, typically it actually depends with the client, but what we have seen is because the most of the clients that we're getting are professional traders already. They're already familiar with the financial markets. And then there are also clients who are coming in who are new to this, who are still learning the ropes of how to go about and navigate the application. The success rate so far has been looking promising. Because typically when a client comes in, before we ask them to fund their account and start with a live account, we advise them to start on the demo account, the practice account. And the advantage is each client has a dedicated support manager, account manager, which would be monitoring this. Uh, so as you make progress on your demo account, and if your account manager sees that you're now ready, you're now consistent and you're profitable, that's when you can onboard onto the live account. So far with the people that we're seeing who started you with this trading CFD thing, has been looking promising. They've been making profits, but we typically advise for clients who are still starting to start with lot size, small lot sizes, as I was saying in the presentation. So with small lot sizes, you would be seeing your very small profits, like your dollar, your $2. Maybe in a day, if you trade 2 times, you make your $2 and you turn that into a daily basis. At the end of the month, you'd see that you would have accumulated $60. So as the more that you trade, the more that you gain experience, that's when you would start to increase your lot size, and maybe in a day you would making your $5, your $10, depending on your account size. But what I would say is, if you're starting out, start on the demo account. Then when you onboard to the live account, start with a small amount and gain confidence and experience and consistency. And from there, you'd start to see the progress.
Yeah,
Thank you.
just to
That's
add
quite.
on. Yeah, just to
Oh,
add
yeah,
on,
sure.
JT, to what teacher said. As the regulator, we've also got a portal that shows us the new onboarding, the new investors that are being onboarded, and we can also tell that this one is an experienced person, this one is not experienced. We've noticed an increase on when VCG introduced their social trading platform. So yes, you might be a newbie in it, in this, starting off as someone who's still new to the platform. But the more you learn, and then the more you get to go to their social trading platform, more you can do the copy trading. You'll have an idea of how things are being done by the professionals now. So your success rate chances become higher based on the fact that you have maybe 2 weeks in it, and then you go and see how the other well-known traders are doing on their copy trading platform. It helps you now also to build your own portfolio when it comes to doing the fundamental and technical analysis. But as he has said, you also have to gain confidence based on what you'll be doing on the demo account. Then from the demo account, and then move on to the live. And one of the advantages you've got is that copy trading platform where you can see what others are doing. It's just a matter of subscribing to that platform. I hope that
Ah,
answers you as well, Jason.
it's
Yeah,
actually
sure.
very
Thanks.
It's actually very
That's
good that
very
Edmond you highlighted this because you, as clients, you actually have the option of doing both. You could onboard onto the copy trading application, and at the side, whilst you learn, you could still trade on the side for yourself.
Thank you both. Maybe if you may allow me to just add a few questions. I don't know if that's fine.
Sure thing.
Yeah, sure. So one has to do with tax regulations. I don't know if this is relevant for you guys, but let's say I manage to trade and get some income. Do we have any specific tax regulations within Zimbabwe?
So fortunately, as of now, currently you experience no capital gains tax. So when you make your withdrawal, you're getting your full amount.
But that's perfect. And probability that that could change. You know, we kind of have a lot of tax issues coming. An idea.
On that matter, I'm not sure. It
So,
depends
so
on.
at the moment, I think it's a situation where we're trying to promote investment in Zimbabwe. So, the coming on of CFDs and VFEX and SEXIM regulating this means that there's a drive to promote it. And we've even noticed in the normal market, the capital gains tax has been going down. So, it's more or less a situation where this investment is being promoted heavily. So, anytime soon, we don't think so. It's more or less a situation where we want to promote investment and also us trying to conscientize the nation on the different options that are there.
Yeah, thank you. I still have some questions, but I note it's almost 12. If any other people want to ask something, they can go ahead.
Sure. If someone wants to ask, they can raise their hand and then they can then go ahead and ask their question. But if no one comes up, JT, you can continue with your questions.
Sure. I think I see no hand from my end. I just wanted to, when you were sharing your chart, I saw some big spike. How often do you guys have slippage on your platform? How does that really work? Do you have any compensation if it is an unfair slippage, or if it happens, then the trader bears the loss? An idea on that?
So typically that when you see a spike in the market or gap in the market, typically that happens when the markets are closed. So with CFDs, the markets are open from Monday to Friday. So there are some traders like your swing trader and your position traders who can have positions open throughout maybe the weekend period when the market is closed. So they may experience these gaps or spikes in prices when the market opens. And also, this is also affected by your news events like your interest rate cuts, maybe your NFP, like which is coming tomorrow. So it actually depends on if the gap is in your favor or if the gap is against you.
Okay, so Teach, I think he was asking with regards to say if there's a system glitch, you can correct me there if I'm wrong, JT, where you're saying who then bears the loss when it's the system glitch. So what happens here is there are well-known platforms. The system
Mm,
that was being presented is the MT5 platform. So this
mm,
one is a well-known platform
mm,
that offers Forex trading, CFDs, let's just say it offers CFDs as a platform where VCG approached the MT5 platform and said, we are brokers, we are in this business, can we use your platform? So at the end of the day, MT5 platform are the big boys when it comes to providing systems and platforms that do Forex trade. So in the 0.001% chance of the MT5 platform going down, it's on the platforms. We say the risk is with the platform because they've given VCG as well as VFX and SLA to say that our system will be up 99.9999 times. So I think if we look at it from a historical perspective, it has barely been down. I think it's only internationally when I think it was Microsoft or some of these big cloud service providers went down. It then went down internationally, and some of the markets just halted their markets for a moment. But it won't necessarily be because of the platform. So I hope that answers you. But it's a well-known system. You can research around it, and they are the ones that offer it to most of the brokerage firms that deal with CFDs out there.
Clear. Then last one, do you guys have any physical office or how do you operate?
So fortunately for you, we actually have an office here in Harare, located at corner 187, corner 9th Street and Baines Avenue. I think one of our account managers will type it in the chat section. So feel free to come in at any time. We're open Monday to Friday from 8 a.m. to 4:30 p.m.
Thank you, guys. That's over from my side. Yeah, I'll take note of the address in the chat.
Sure thing. Thanks.
Also mention your HQ address as well.
So our headquarters are located in Dubai. Yes. Then our branch offices are located at the address that will be indicated in the chart section. Anyone with any questions?
Okay.
Yeah.
Thank you very much, Tich. Thank you very much, VCG. Thank you, attendees, for joining this training. We're going to continue to have these trainings, and we're just going to be consistent. No matter the number of people who will be joining, be it 5, be it 2, be it 1, we will continue to train because this is part of our investor education. We want to be consistent. We'll come to a time where we'll then start to release out schedules as well as mini syllabuses that tell you that the following week we're going to have 2 trainings. The first training might be on the introduction. The second training might be on the advanced analysis or technical analysis or fundamental analysis. So now you've registered on the platform, so meaning we do have your emails, and we're going to be sharing these schedules as well as the current video that is being recorded right now. We'll share that with you, and the PowerPoint presentation that was presented by BCG, we'll share that with you as well. We're also in the process of creating mini videos of how to open a position, stop loss, and how to put your sell limits, buy limits, how to withdraw, how to deposit funds. All those videos are actually in the making, and we're also going to make them available on the different YouTube channels, one for VFEX and the other for BCG. And also, they also advise you to also follow BCG. They also post information about their platform, and they also put relevant tips on their platform as well. And if you're also on VFEX or ZSE, you also get the same tips and tricks there in terms of CFDs. But here we are saying CFDs, but right now we just want to focus on the current trend, which is Forex trading. Then we shall also move to the minerals, the commodities rather, and stuff like that in the trainings to come, so that most of our investors have a holistic idea of how the international markets are actually working. It also means that you also have the capability of purchasing international shares and other things like that. So we're going to try by all means to keep you informed and to also give you lessons and teach you on how to exploit this investment opportunity that we've managed to open up through partnering with our broker BCG. And we're grateful for you coming. And as a closing remark, we just want to thank you and to encourage you to study first, read first, go through the demo account first, contact the BCG guys. Their door is always open. They will assign account managers to you, and you will know that you are going to have someone who's going to be taking you step by step throughout your journey in terms of investing in CFTs. Yes, they'll leave you at the point where you feel as if you're now a professional and you can do this alone. But we're truly grateful for you joining. Thank you very much, and I think we can end here.
Okay.
All right, thank you.
Also, Edmond, before the account managers' contact details have been placed in the chat section, so feel free to reach out, contact us, and we'll be able to assist you.
Thank you. Cheers.